are you interested in finding out how you can get up to 4.5% of the purchase price to help you purchase your first home in Virginia? I'm here with Aaron Bell of Guild Mortgage to help us navigate through that. Good morning, Aaron.
Hi, good morning.
How are you today?
Good, how about you?
Excellent, thanks. Tell us a little bit about yourself and Guild Mortgage.
Yeah, so we're Guild Mortgage. We're an independent mortgage bank. We have a ton of first-time home buying programs, but specifically in Virginia, we have Virginia Housing. We're partnered with them. They'll give you 3.5% to 4.5% as a second mortgage, or you can get a 2 to 2.5% grant towards your closing costs, and they can be paired with other local county programs too.
Oh, excellent.
Yeah.
So the county programs are the Spark Fund, is that right?
Yep, Spark is I'd say the best one, but it has the limited funding. So that one will basically give you a 1% lower interest rate when you close. So
oh, nice. That's a big savings.
Yeah, and that can turn someone that's not qualified for a house to completely qualifying. So 1% lower, it changes your payment quite a bit,
right?
Especially in today's
which affects your debt to income ratio, and that's why you might not be qualified. Right?
Exactly.
Got it. Okay, so what are the criteria for the Virginia 2.5%, 4.5% situation?
Yeah, so if you want the grant, it's going to be based on household income. So they're going to really scrutinize all the deposits in your bank account. So maybe you're on the line of their income limit, but then you get a bonus this year. They're going to annualize that bonus. So sometimes they can push you over because they're going to scrutinize your income so much. So a lot of times we'll talk with the borrowers to make sure they're not getting any big bonuses coming up, because it can throw a big curveball.
Off till next year.
Yeah, exactly. So a lot of times we'll kind of explain that because if you're on the line, it's definitely a little nervy.
Right.
But someone that's way below, we're typically not really running into any issues. But it's not a problem if you're above that income limit. You can actually just get a second mortgage from Virginia Housing, and it's repaid at a 30-year term. So.
And that's a 0% interest?
It matches the first mortgage rate. So if you have 6.5 on the first, it's going to be 6.5 on the second. So I mean, it's normally not too big of a monthly payment, so it's not bad. Because if you think about it, you can either try to save up the money, which is going to take you a couple years, or you can get the money today. And they don't run out of funding for the grants or the second mortgages.
Okay, so that program's pretty consistent all throughout, and that can be anywhere in the state, right?
Yeah. And then the income limits change per county and area. So the DMV area, or I guess just Virginia, in this case, Northern Virginia.
So we're in here in Northern Virginia, maybe all the way out to Warrenton or something. It's pretty high.
The income limits are really
high. We don't have to worry about that, right?
And then if you go to Richmond, you'll notice the income limits are quite a bit lower. So a lot of government employees that work out there make good money, but they might be above their normal limits, whereas Fairfax County, you wouldn't even,
but the price points in Richmond are a little lower as
well.
So maybe you can afford it anyhow.
Yeah, exactly.
Okay, excellent. And so then how do the Spark funds work?
Yep, so Spark funds, it's per county. So, if you're looking in Spotsylvania, Fairfax County, Arlington, they all have different counseling, where you have to go through their counseling program. Each one's different. So some is a simple phone consultation. Some you can just do online class with them. But a lot of times, they get booked up quickly, so you want to do it as early as you can, because the certificates basically last for a year to 2 years, depending on the counselor.
And so if a lender is working with you, or borrower, and they want to pursue one of those programs, you'd connect them with
so every beginning of the first quarter, maybe the end of the first quarter, we'll get an email out basically saying, here's all the programs. So that way we know, all right, you're looking in these counties, here's your 3 counselors you can reach out to, because they get booked up quick, so you want to be able to have some options, because sometimes you run out of time, and you got to get someone else.
And you also said that that their funding is
it goes quickly.
On and off.
Yeah, because
so you want to have all that stuff done and ready to go. You want to just be able to pounce.
Exactly.
Is there, right?
Because you can't reserve the funds until you've done all the classes. So if you are in contract and you haven't done either class, you're likely going to lose out. But if you've done it already, you can get it right. You can get it right that second once you're in contract. So,
and do you have to be under contract to get the funds, or can you reserve them and then go shop?
No, you have to, once you're in contract, that's the only way. They will not reserve the funds without a ratified contract.
Got it. So that does make it kind of tricky,
Yeah,
right? You have to have a house in mind that's sitting on the market, and then you can jump on it, right?
So get a little lucky sometimes, and you'll find the funding. So it just depends on the timing of when.
But that could be a significant amount of money, right? They have what's it, 10,000 or 15,000, something like that,
for the Spark. No, it really varies on like what county it is. So I don't think they like really tell us a number. They just basically will email us saying, hey, the funds are low. Like, get your reservations in as soon as possible. Like, they'll say, all right, one more is left or something. So that's kind of how they do it. Just each one has different, like, I'm sure like Fairfax County gets probably more funding or something. And then like somewhere in down 66 or something, and probably a little bit less funding just because there's less houses.
Right.
That's the way I think. I don't actually know.
Right.
But it's just like the way I would look at it.
Well, if you find this video helpful, please hit the like button so that other folks like you can find it as well. Aaron and I are both here as resources for you. I'm Taylor Johnson, by the way. Aaron, do you have any advice for folks who are thinking about buying, say, the next year or two?
Yeah, I would say if you're interested in buying, even if you're 5 years out, the earlier you start, the better. Just because you want to start looking at your credit, because a lot of people have weird, credit things that stick on their credit for a long time.
There are skeletons in that credit closet, aren't there?
You cancel, your cable bill and you move and you forgot to pay like a $20 fee, it'll be a collection. So you want to get these addressed earlier, because the earlier you start correcting the credit, the better your score is going to be in the future. So even if it's 2 years out, like it doesn't hurt to take a look today.
I had a situation happen with me this year. I had a medical bill that I couldn't pay it right away, but I was then ready to pay it, and I went into the portal and it wasn't there.
And they just probably sold it.
And I called them and I said, I'm ready to pay, and they, well, it isn't there and it isn't on the account. And then I got a letter from collections.
Yeah,
wait a minute.
It moves fast. It moves so fast.
Yeah.
So, but it happens to so many more people than they think. They're like, wait, I lived there 4 years ago. Like, I didn't realize it's on there. Like, that's someone that moved from a DC apartment building, and he owed it was like $5, but they just, because it took so long, it grew. Wow. So by the time he noticed it, it was like up to $500 something. What? So we luckily he talked to me early, so we got it corrected. But it's just like weird items you're just like, it won't be that bad.
All that trouble over $5. So I heard today that the rules are changing a little bit, that they're going to allow rent payment as a credit establisher now, which will be a big help for a lot of people.
Yeah, because if you can show someone has good on-time rental payments and they don't have a lot of credit history, it'll help basically show their credit candidate.
So it's another thing that if you're looking ahead, be sure that you're on time with your rent and your utilities, because you could start using those to build your credit as well. And all of those things are important for helping to build your credit.
Exactly.
Right?
Yeah. And the sooner the better, because I can put someone on a plan today, and a year from now they could potentially be ready to buy. And if they were just trying to do it themselves, they have no idea. Like, as a lender, we see all of tell me everything, because I'll help you get there.
I think that's a really important point, that a lot of times I talk to people and they say, oh, I want to do blah, blah, blah. I know I need to work on my credit and I should do blah, blah. And I say, well, wait a minute. Have you spoken with a lender? Because it may be that what you're planning to do is not the most efficient way of raising your score.
Exactly.
Right? It might feel good to you, but in the way that the credit companies, credit bureaus count stuff, it isn't the best thing to do.
Yeah.
So always talk with a lender, get an idea of what is the most effective way and most impactful place to put your resources to fix that problem.
Yeah.
And the credit score, so you need like a 620 as a minimum, right?
Virginia 620.
But if you can get up close to 700 or into 700, then you really have, it's a golden situation.
Yeah, I tell people, it opens up basically all your options. You can look at an FHA, like a government insured loan, or you can go with a conventional. And so it just gives you more options. So that way,
many more options.
And you just, it can just help with your monthly payment, potentially maybe lower your down payment or just get you better terms.
Right.
Unless I guess we call them like overlays or like additional rules. Like if you have a lower credit score, they might make you have 3 months of savings after you put down your money. So it can make it trickier for someone that maybe has a lower credit score. So that way, if you get it higher, there's less restrictions basically.
Right.
So it just makes it a little bit less stressful to buy. It's always stressful, but like if the less things you have to do, the better you're gonna have the time.
Yeah, and the more you do it up front, the less stress it is when you're under the contract.
Exactly.
Believe me, we both worked with clients that did it all ahead of time, and everything was a breeze. And their others are like, up to the last minute.
We're like,
come on, like do you know how long you have to do this? Like,
And I'd also say like a lot of the free credit services, they don't show an accurate picture of your credit score for how like a lender is going to look at it, because they use a shorter time frame for how they calculate your credit. So like it'll tell you have a higher credit score in their system.
Yeah.
But in the mortgage system, we're looking like 5-7 years back. Yeah. So theirs is like 6 months. So it's like, you've done a good job for the 6 months, but a year ago you might have missed a payment. So we just need to make sure we're like getting everything.
The Credit Karma score is not the one that rarely, lenders use.
Yeah, it rarely matches up. Yeah. So I when people tell me, I'm like, well, let me take a look at it, because sometimes it does match up, but I'd say most of the time it's not going to be, because it's calculating on a shorter period of time for your credit.
So there's more opportunity for a skeleton to pop up.
Exactly. Yeah. So that's why I tell people, like, it doesn't hurt to just let me take a look at it, because maybe you're ready to go today, and you just but Credit Karma's give you a different.
Well, and consultation is free, right? Mm-hmm. So many people that I work with who are interested in buying a home are kind of afraid to talk to a lender. I'm like, please do it now.
I love talking about
that conversation. It's just a 10-15 minute phone call, right? And you're going to find out things that are really important, that are easy to work on over the next year, that will make it so much less stressful for you when you're trying to actually buy the house. It's a little bit of investment now for a much bigger payback later.
Exactly. Yeah. And I notice a lot of people they learn that you should dispute all your accounts, and that actually hurts your score quite a bit. So that's like one thing I've noticed with someone that thinks their credit's a lot higher, is they have a ton of disputes. Yeah. And once you remove it, your scores will go right up.
Wow.
So that's like I've noticed that about a lot of buyers, that they've been told to dispute everything, and it does not help you at all.
Doesn't help. Yeah. All right. Well, again, Aaron Bell, Guild Mortgage, Taylor Johnson with Keller Williams Capital Properties. Our contact information will be below. Please hit the like button or subscribe to the channel, and share this video with friends. Thank you, Aaron.
Thanks for having me.
Have a great day.
All right, you too.